What's up, friends? Welcome, welcome, welcome. All right, guys. All right, all right, all right. Oh, the Discord bot is sending the wrong thing. Oh, let me check on that. Hold on. Let's double check that. What's up, you guys? Oh, wait, I get the Zoom call started here. Ugh. Yeah, thanks for reminding me. What's up, you guys? Good morning, good morning, good morning, good morning, good morning. All right, welcome. ETF contest. Top 3. I've been going up every day, but this is the mechanic I told you guys about. Last week at the contest, people start YOLOing their accounts. Somebody went from like 7,000 to like 48,000 in like 2 days. I'm talking plant their money long on Friday. Just be like, whatever. We'll see what we get. And then all of a sudden, boom. No matter, so trade contests are like that. I always forecast that. So we're going to hit it big. We got to hit this big today. Zoom call here. What's up? What's up? Everybody get ready to go. All right, friends. What's up? Okay. Y'all believe that? Look at this. Look at this. Steady. I've been steady the whole way up. Been going up and up and up and up and up and up and up. And, you know, some people steady, but you kind of get this thing where somebody's sitting there like in dead last place. And then a couple weeks, you know, like a couple days left and just like, you know what? All in. Let's see what happens. And half of them coin flip up, half of them coin flip down. Normal trading contest mechanics. You got to know that's the part, right? And there really is nothing other than first place for me, right? It's either you're the first or you're last. So we got to bet big no matter how much we're going up. Look at this kid right here. Love these folks with 16,000 a single day. That's full port NASDAQ right there. Right? So we got to figure something out here. Now, of course, you have to wait for your big day to swing for the fence in a trading contest to secure a lead. And I've never really done that. I've kind of just been steady up. And I also got a week late head start. That kind of makes it hard as well to catch up because I couldn't demand a commanding lead even so. Now, hopefully I get, you know, top 3 is cool, whatever, but I want first. I want to win this. I'm down by about, like, any time I go up, everyone goes up faster. Some big old, these two people YOLO'd to the top. How about that, right? That big gap up on Monday. Just drop, plant yourself long on Friday. Easy monies, right? So we'll see. We'll see. Hopefully we'll do. All right, guys. Welcome to the stream. Hit that like button. Let's go. Let's go. All right, let me check out that bot really quick. What's going on there? What is the bot saying? All right. What is it saying? Like a welcome message it sends, right? Book Club fell like slightly behind me. It's like right below. Oh. Thank you for letting me know. Yeah. All right. Here. It's 50% off. Blah, blah, blah. Changing it. Thank you for letting me know. All right. Here's the new link. Let me send it to you. So you guys are trying to check out, join the service right now. A couple things going on. We have our new, this will be our Black Friday deal, hint, hint, but it's going on for just a week. Now, we're doing $1,500 of lifetime. That's huge. That's huge. We never really do discounts on lifetime like that. So, check that out. So I know Ice Wild. Check out that link now. It should send another one. Boom. All right, so we got our dynamics here, monthly hedge here. We are actually below it on the S&P, so that's kind of alarming there. For some downside, just be careful. Nasdaq is still kind of bouncing off that half gap. We talked about that as well as the dynamics. So we'll see what Nasdaq is doing. I still feel something consolidating like this is looking to push some ups, especially with earnings. So we get first place, baby. We got this. All right, this week we have CB numbers, jolts on Thursday. I know those are big. It's a big news week, by the way. No. Today. Why did I say Thursday? Tuesday. Today. Those are big numbers. 34 minutes coming out. Jolts are going to be huge. Jolts helps with the inflation, understanding that available job openings and decline. That's something you want to kind of notice. And let me go ahead and share some info with you guys if you want to learn a little bit of boring fundamental stuff. I try to teach you to make it easy. You do this for long enough, you kind of go right there. Available job openings that can be filled within the 30-day window that actively being recruited for. There's no bottleneck. So basically, when the economy is doing good, you're going to fill the active jobs you have. Or if the economy is doing bad, you're going to close jobs and fire people. The way you determine the difference between the two is you pin it right up against the initial jobless claims come out every Thursday morning. You can say, are people getting laid off or not? Jobless claims are going down. It means that means fewer people are getting laid off. The jobless claims are going up and jolts are coming down. It means people are getting laid off. Continuing jobless claims, if those are going down while the jolts are coming down, then it means people are going back to work, filling available jobs. So as you see, that number is kind of going up. Jolts are coming down. It means we're kind of stalling in the labor market. Now, again, we use that to gauge what the Fed's going to do. The Fed's already committed to a second rate cut despite this information. So I don't think it's going to be a big hitting thing today, but I think everybody's looking for any kind of news that will dethrone the Fed. And jolts popping up with unemployment popping up could be a bearish run for the market today. Be careful on that. Careful on that today. All right. All right. Let's get ready. I got my futures open here. I got a couple of elite static accounts ready to go, fresh out the door. Kind of get some juice on those guys. All right. Hey, when they sit at 0, when you get some fresh ones, you got to make sure you put something on it. A little bit of fat in the account. That's kind of what you're looking for. All right, market opens in 2 minutes. I'm going to see what we get. Oh, earnings today. Hold on. Let's go here. Earnings calendar real quick. That like button, you guys. Head over to YouTube, hit that like button really quick if you can. Stream over here in Zoom. Give us some love down there. Leave a comment. Pre-market, look at always the same. Look at our news aggregator. Look at the earnings for the day. Let's see what we got coming out today. This is obviously big day today. Google, Visa, AMD, all aftermarket. So watch it closely on the Nasdaq. I really do think that we're gonna get some pretty decent runs on this stuff here. But we'll have to take a look. Our SPY liquidity mat's open now. Make sure Nasdaq is very important. We were talking about this yesterday. If you guys learned our lesson on half gaps. Half gaps are prime. You got to learn how to do this. Right? I posted in Discord as well as ETF Discord. You can see half gap is such a cool support. You expect it to hold. This is S&P. If the market's going to sustain a bullish move, that gap up is not going to fill the gap. If it fills the gap, we're going to be bearish. So hopefully we get some run up today, but I'm kind of nervous that we end up just popping down on Google and then supporting and rallying the next day. Either way, I think we're solid on the market. Best looking out, 3 indices, another one. Yep. Something about thinking NQ is the best looking of all of them. NQ is very solid. Now, in the overnight session, NQ pulled back a little bit harder than I was hoping for it to, but the NQ is looking great in the overnight. Better than SPY, definitely. NQ's monthly hedge pressure way down at the bottom or in the middle of the bands. We'll look for some good bull ups to get some runs out the door. Let's get our liquidity map front and center. You guys know the drill. ED band's kind of right in the middle. Market is open. What trade copy are you using? TradeRate has one. I don't really do much trade copying. I like to trade my accounts individually. Nothing burns more than hitting 2 accounts and 10 accounts and having them all fail at once, right? Our YouTube friends, hit that button. That like button is ready to go. Okay, opening above half gap. We got both Nasdaq and S&P resilience positive, which is good. That gives us a support on the bottom of the box. I do like that as long as those numbers stay great. If it's negative, it goes below. Obviously, the initial opening move is going to be a little kind of jolty around. Oh, we do not like bear zone opens, do we? No good. All right. Now, kind of sucks, but any break into here is a trade up to there. And an X, and then back down. Any support in there is a run up. Now we don't bet that. We bet that we close down in here, which really sucks. Now I also don't short against this if this ratio is less than half. I mean, the ratio is greater than half. So I'm just waiting now. This is a wait. QQQ is kind of like meh. Okay, don't like it. Resiliences are negative. We also have resistance there. So it looks like we have some downside move today. Open out the door. S&P in the same boat. Womp womp. Okay. Checking out liquidity map here. Bear short up is a resistance this way. Resilience less than 0 is resistance this way. That kind of sucks. Support is here if we get it. Any break into the middle longs to that side is an X. So I'll take a trade from here to here and I'll close out. There is no long support inside of here. Unfortunately, that kind of sucks. So both the indices, SPY, QQQ, looking like downside, but they're not short setups because resilience is super duper strong today. There's just no really good long entry. Russell's probably the nicest looking one of the day. Russell has a monthly hedge pressure support. You see on the liquidity maps. Bottom, gold up to blue. Gold to blue is always a trade. 19.5 to 5. Okay, so that's it. Stupid market. What are you hoping? Give me some good ups today. That's all I need. I want to see something good. And sucks. No good entry point, unfortunately. SPY is breaking overnight dynamic right here. Dynamic hedge pressure in the overnight. It's a little bit of downside move on SPY. I'm looking for this to possibly pull back all the way down to bottom DD band. So let's look at this. There's a float, 0.75, which means this green line on S&P futures is a support right about 58.25. So looking here to here support, and yeah, so that's kind of like meh. Not a big fan of that. Not the biggest fan. Nasdaq futures kind of in a similar boat. Again, support right there. I'll pop some longs always off the bottom of the span when this ratio is greater than half. So we'll say that on Nasdaq is about, I'll give like 100 points lower. So unfortunately, there's no trade setups out the door on this one. No good ones, at least. I could see that using our tools. Pretty easy to kind of see what is and what isn't good. Always long monthly hedge versus support. So if the market crashes out today, there's a great long entry from the bottom. All right. Boo. SPY is actually, futures has a gap to fill, so that's one of the things we are looking for as well. S&P futures has a that open gap still, I believe, from which is, let's remember that was SPY futures. 58.41, so we just filled it. Yep. Okay. Boring, boring, boring. I personally would like to see some good ups today, but did I think it would fill the gap today? I wasn't expecting it to. I was hoping that the bull market would kind of hold its own and create that sort of bullishness, but we are in earnings season, so the market has a hard time like rallying very quickly a lot of the time into earnings. Usually you kind of like span the range and the earnings will pop us back up. This could be a day where like the end of the day, the market just flies up back to where it wants to go. But probably a little pre-earnings selling. We do have big tech today. AMC, Google, all today. Yep. VIX above triple B now. Let's double check this. This is a big part of what we need to look at. No trades for me yet. You sure? I don't think it is. No. No, Frank. VIX is chill. B's up here. Way up here. VIX is still cool. Yeah, be scared for a little bit. What is going on with the liquidity maps today? Why are we not showing up? Hey guys, let me reset my platform real quick. Hold on. Don't go anywhere. Hang tight. Friends on YouTube, do me a favor. Smash that like button really quick. Okay, so here's the liquidity maps work. If you guys haven't used our software, it's pretty simple. We're looking for pressures in the market. There's that kind of SPY's looking to fill its gap. So that's one thing that SPY does have to do. There's a gap fill right about 578, kind of on the dot. The SPY has a gap fill right there. Use white lines for gap fills, and that's it. So inside of here, essentially you have a couple of setups. MHP is always a reversal. Originally speaking here, let me do this. MHP, always a reversal point to here. This will have a determining point. If resilience is less than 0, we resist, and that's likely the case. Bear zone is also resistance. I don't short off of here with this number greater than half. As a matter of fact, I always break a long. When we touch top of bear zone, I always long to go to there. And I close out that trade, and if that trade holds inside of here, I could possibly take a long to move higher. Now again, this is just waiting for any kind of setup. Inside of here, I'm not going to take a short. I'm not going to chase anything. Just let it fall. Let it do its thing. Being smart is better than like being dumb, I guess. Okay, for here we go. Futures. Going way back here. 83, so like 84, give or take. So DDVN will roughly be right about there, just guessing, somewhere in that area. So right now, just kind of waiting. So S&P, there's long setups from here to here. There's long setup from here to here. I don't short unless I get really good short confluence. The resilience less than 0 means this is resistance. But really, on the gap filler, could be some support. I'm not touching this one today just yet. Q, same boat. Yeah, VIX for November is 20.3 and Triple V is 20.3. VIX is trading at 19. You're 4 points away. QQQ, same setup. Always take a long in bear zone top if it pushes. Always long about the hedge pressure at the bottom. In the middle is no man's land. There's not really a trade there. Let's see what Russell's doing down here at monthly hedge. Nothing yet. Down here's a support. Russell's same boat, similar here to here, and then of course the break there to there. I mean, all the stuff looks the same. Nasdaq futures. We have kind of like key support areas. If you retain 476, futures has the support and trade from 476 all the way up to here. Between your two hedge pressure estimates, these blue lines are pivots. Below here, not necessarily a trade setup. Kind of like this. So again, Nasdaq in that weird boat where it's in no man's land here. Probably down before up. And while you're doing that, I'm going to go to the restroom and be right back. Whew. All right, I'm back. Whew. Out of breath. Run up the stairs, down the stairs. All right. We're so good we can spot these setups a mile away. Not buying the dip, not jumping in early. Just waiting. Liz said, remember what you said yesterday? Learned what I thought about it. Do I think we fill the gap today? So if the market is bullish, it wouldn't want to fill the gap if it's like really bullish. But market isn't necessarily bearish. It's just not super bullish on that run. So you don't usually want to see those gaps fill if you're super bullish on the market. Heartbreaking. Let me show you guys something. Daddy-O here, #1 trader on YouTube. You guys know the drill. Can out-trade anybody one-on-one under equal conditions, right? Pick your favorite streamer. I'll run circles around him. You know that. Now here, I'm trading nice and steady the whole way up. And the last, me and Clip Clop been crushing it. Van crushing it, neck and neck. A good, healthy competition between solid competitors, right? This person took a big loss, crawled their way back in a decent setup here. I mean, everybody's doing pretty good. The exception of these two people. Been choppy all day long. $10,000 and $20,000 up, down, up, down, up, down, up. And this person who YOLO'd last Friday. So the two people, first and second place, did what I said they were going to do. Friday at the end, a week left. People, you should go in these contests and they'll go, you know what? I'm in, dead last place. So let me go ahead and all in and just see what happens. Either go to zero or go to the top. So trading contests are like that. So you have to understand. So I have to plan a strategic YOLO myself. Because the only way to get a commanding lead to get first, you have to outpace the person that goes, oh, I don't know, from 7,000, 10K start. And 2 days ago, this person was at 7,000. All power to them. And now they're at 48,000. Imagine taking a paper account at $40,000 in 2 days with a full port. Or go to zero if you lose. Now, of course, that is something that can happen. I just have to outpace them now. They're only $3,000 away. I doubt they can repeat that luck again. If they do, you might see some 100K competitors at the top. But in reality, trading contest, you have to plan your strategic YOLO because there will be people in the middle that just go all in or whatever. Let's see if I can double my bet or whatever. Humble much? Oh, I'm extremely humble. I'm the most humble person on the fucking planet. We haven't had Think Thin bars. These are actually really good. You guys watch. You're here to learn. You wouldn't be good at what you did if you weren't a little, somewhat loud about it. All right. Anywho, good for these folks, but we have to make a strategic play to outpace people that are popping in, $20,000 days on a full port. So, 3 days left in the contest. I got to plan my full port. I got to pop a trade with everything I got to push ahead and lead. I know what I'm going to do. What do you guys think on YouTube? What are you guys thinking? Chat. Smash the like button, friends, while you're at it. What do I do? Bears on top, bulls on bottom, wait time. Yep. Okay. What do we do? Thing is, I got 3 days to find a high probability setup. I think Nasdaq crawling right back up to that bear zone to start where we started. Nasdaq resilience is positive, which is actually pretty good. Some of the stocks are filling the gap, and Nasdaq is looking like it's trying to make a run here. What do I do, guys? There's no entry point here. That's like the crummy part. Nasdaq back inside of hedge pressure zones, which is good. Uh, As it has this topside resistance here, we're kind of back to where we started in the overnight, which isn't too terribly bad. Like I said, I'm not bearish this market. And looks like the SPY gap is trying not to fill. I got SPY up here. This is where SPY moved, and this is SPY's own half gap, 579.7. And of course, Liz, to answer your question, the SPY gap hasn't filled. If this was bullish enough, we're going to support and hopefully hold by the end of the day. So we'll see. I'm thinking on the challenge account, I take a full port on the dip. We got to go from third to first. There's no prize I want for third. The first or bust. Question is, I don't have a good entry point for a long. There's really like no good entry point anywhere for a long inside of this range. So this has ups to here. S&P resiliences are down, so the market is rejecting and resisting in this area. It just looks like it's systematically going to trade down all day until earnings, and we'll get a pop. Usually happens a lot pre-earnings. There is no good setup in here. I was a little bummed out to see that the with four contracts getting 20K is a feat on a 100-point move in Nasdaq, because that's only like 8,000. So you had to do something interesting to get more than that. Nasdaq popped up 100 points yesterday and then sold off. At best, I was expecting some of the full ports to get like 10K, and then two of them got over 20K. So it's kind of like, or got close to 20K. So that must have meant on Friday, the two people in first place literally bought the dip, and that massive pop that we had Sunday night. I didn't hold anything over the weekend or nothing. But I didn't expect people in the $8,000 range to make it to the $50,000 range in just 2 days. So we got to play extra hard. Problem is that we need a good setup just to hit it hard. And problem is that there's still going to be a lot of folks doing the same thing last 3 days of the contest. So what I have to do is pick a strategic direction and hit it hard every day and then hope for luck. Right now, there's really no good entry point on any of the setups here, which I don't like. SPY's not a good entry point. Nasdaq's not a good entry point. There's really nothing. Bear zone top, if we tap right here at the top, I'll long for the break, which I always do. You can draw here. So Nasdaq futures have a potential run. I don't long when I don't have a support. But when you hit this and start moving inside of here, it's an automatic long to there. Normally, I'll cut out right on the edge if that happens. So bear zone to bull zone long is a very solid trade. It's in our cheat sheets right here. 74 is a good ratio. Pull up some of our cheat sheets so you guys see what we do in our Discord. If you guys are members, you haven't joined our Discord, by the way. Our Discord. We do trader training. You can have access to liquidity maps, all these tools, all of these cheat sheets. Today we're looking at this particular setup off to the right. We have DD ratio. We're going to open that up here. We have resilience today, which has been negative. Pop that open here. These cheat sheets kind of like walk you through what the different options are with some of our indicators. I'll show you guys what each one's doing briefly. You know, idea what I'm looking at. Why I don't see a good long setup from here. I'm not bearish to the market. There's no good long entry point just yet. So anytime you're in bear zone, which is the light gray on my chart, and you pop into the middle, it's always along the bull zone tap. And I exit. I don't normally hold past here because it usually opens and closes in the same zone more often than it doesn't. So I also don't short it back to there. I close it here and I wait. And if it hits the bottom, I'll trade it every single time from the bottom up. If we do break through, then I actually chase the long, but I need the confirmation to take that long chase. DD band states that if this ratio is greater than half, which it is, we support the bottom on futures. You have this like green lines can draw on my chart. There's always a support there, and I hit that really hard when it taps. So that's the good long entry point today if we get a really good flush. And then the last thing is that these resilience numbers, this kind of white box you'll see on my chart in a second, the bottom of the box and the middle of the box are both resistances in this case. And so as you see with these white numbers being negative, the bottom of the box and the middle of the box are resistance in this case. It's resisting there and resisting there. So you have competing pressures. We just draw on the chart every day, like the same thing. You have resistance there and resistance there. You naturally have a resistance from bear zone as well. Really no good supports here. But the market, if it taps here, there's those two resistance lines. If we break, I usually take the long to there and close out. And I'll take this long every single time. And if I get confirmed break, then I move up here higher. On futures side, so we look at futures chart and we look at an equities chart at the same time. Side by side, drawing over here, is that the DD ratio is always a trade from here to here. Always. And that ratio is greater than half. I hit this hard. If this somehow falls to here today, that's my big full port if I can get it on this contest account. Built in 10 minutes. Like Google earnings is going to feel due to the fact so many people stop using it, and search engine ChatGPT is now apparently Amazon. What's its own search engine? Oh, interesting. All right, we have jolts in a little bit. The CB consumer confidence number in a little bit. The two resilience numbers, as you see down at the bottom, S&P is -12, NASDAQ is -20. So S&P is actually the stronger read today. There's more market cap filling its gap on the S&P, so let's watch. With them both being negative, again, you have those resistances here, but we'll see how this plays out. So let's put our Q chart in front of us. 5 minutes for news. We got news front and center. Good traders got to spot a good setup. If you don't see it, don't take it. I'm still very bullish this market. Very bullish. There's no sell-off. There's no bear market. There's nothing. I had a conversation yesterday with a friend of mine. There's a lawyer and a trader. And belief was that S&P at some point was going to be at like 1,800. We had a conversation. I go, no, S&P is more likely to be at 18,000 rather than 1,800. But jokes aside, no, I was like, SPX is going to 10K in the next 2 years. 10,000. It's going to double in size. He's like, but we're trading so many times over earnings at the same kind of like, bear spiel everybody has about what the market should be valued at. But we've been trading long enough. You know how this works. Markets don't crash until there's a frenzy, and the frenzy is when everybody feels bullish. It's not just the markets at all-time highs. That's not a frenzy. A frenzy is when you, your friend, your mom, your grandma, your grandma's dog, your grandma's friends at church are all making hundreds of dollars, $1,000 in the stock market. There's your frenzy. That's the top. And they're giving you phone calls. Hey, Sonny, have you heard about this thing called the Bitcoin? I'm thinking about getting in it. You're like, all right, it's time to fucking sell. That's when you know it's frenzy. When the people who don't trade start trading. That is the secret to finding the top. 4 minutes of jolts. You need a frenzy where everybody's bullish and everybody's making money hand over fist, and all of a sudden the greed is too high and somebody starts selling, it pops a bubble. We're like a balloon that just started inflating. Here's your little like balloon on the ground, and it's filled up with enough air that it's like, filling the sides, but it's not like, like it's supposed to be a balloon. We're at stage 2. It's starting to inflate. We're not at stage 3 where it's like, I can't believe it's not coming down. That's stage 3. And that's usually a couple years of that, and then the bubbles usually pop. About the real estate bubble, when everybody had a house, anyone could get a loan. People are getting like 2 and 3 and 4 house loans and stuff. It needs to start feeling and sounding ridiculous. And then it goes a little harder, and then it pops. So when you say like, oh, we're trading 20 times and 30 times whatever earnings, it doesn't sound ridiculous. It just sounds normal. It sounds high, but ridiculous would be like, God, we're trading 200 times over earnings. I just don't get it. And then it pops. Bull friends, do never underestimate bullish frenzy. I'm telling you. Don't. My saying of that is never underestimate bullish stupidity and greed. Never. Bubbles don't just need to start inflating. They need to inflate, fill up, and you'll be saying, it's got to pop. And it fills up a little more. No, it's got to pop. It fills up a little more. I swear it's going to pop. This is the week. And then 3 months later, gosh, it's not coming down. It's got to pop. And then a year later, pop. You have to know that that is the mechanic of a bubble. Jolts out in 1 minute. So I never say, oh, the market double topped. This needs to go. Fed's cutting rates. Employment situation, stagnant but not bad. Unemployment numbers, normal. Continuing jobless claims, initial jobless claims, normal, within the range of normal. GDP quarter-over-quarter growth that's going up, bullish. Unemployment not going up crazily, not bearish. Everything's good. CPI coming down, good. Fed cutting rates, good. Good. There's good news on top of good news. So the market is just now getting the fuel it needs to start a bubble. To start a bubble. We're not in a bubble now. Okay, here's the move. We are popping. Get a nice little pop. Ooh, wait, hold on. Gotta hate trading on this news. All right, QQQ popping on bear zone. That is too thick for my blood. Ooh, I don't know if I want to touch that. I hate trading on news. It's too volatile, so let's just let it move. Let's see what those numbers came out. Jolts came out at a decline. See if we can super confidence numbers. Don't look it's updated there. I don't think we're gonna rally on this. 7.4. So that's back down on the downtrend. Now again, jolts are coming down. It's not necessarily bad news, right? There's not like a frenzy of new job openings. There's not like massive expansion. But jolts are coming down when the existing jobs, the people that got laid off in COVID are starting to fill back up. Like people are finally going back to work. And companies are, essentially when jolts are coming down, it means companies are filling their jobs or eliminating their jobs faster than they're creating them. So it doesn't hint at expansion, but it doesn't hint at bearishness either. When you see jolts start going up and unemployment start going down, then it means there's expansion. There's a high demand for jobs, and therefore salaries are going to go up and inflation is going to go up. And the opposite case is when jolts are coming down, jobs are getting filled and unemployment is ticking up. There's more people and fewer jobs, which means salaries are going to come down, which means inflation is going to come down, which means the probability of the Fed to cut rates is going to go up. So that is good. And you have to piece all that together as a trader. You should understand that the job is not to react to what the Fed's doing. The job is to predict what they're going to do before they do it. Think of the same numbers Powell looks at, and that's what he looks at. So I'm predicting the next couple CPIs are going to tick down because of these Schultz numbers. How about that? And that's why we teach you how to read this stuff. Oh, it's too thick for my blood. Maybe. I just tap with some micros, maybe? I'm so scared. I'm scared, chat. Always long here. Oh, that res is good. I'm scared, chat. I'm scared. What do I do? Chat, I'm scared. This is a fresh elite. I'd hate to take a fresh elite account on news. Get a 40-point run on NASDAQ. Should I just do it with some micros? Let's pop it off the top. I always take this long. Let's just do 5. Got a hunch. Buy a bunch. Brian's crazy. That's a great saying. That's pretty solid. It does look good here. Always take it all the way through. Whatever. Fuck it. Let's pop it. Go to bull zone. Tap it. Tap it. Don't break my heart. It's not trading if you don't live a little, okay? All right. I mean, kind of silly here. Let's not do 2. Got a hunch. Buy a bunch. I always long from here. In the middle, hates the middle. Push up. I'm gonna be so sad. Get a ranch on this one. It's the spot. All right. MQ. Oh, MQ. Oh, baby, go. 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 I take that trade every single time. I just get so nervous at the first trade on the statics because they're right on the edge. So I just kind of like that's the hardest part with it. You get it right out the door. It's a little risky, but we'll see. We'll see. News always makes it so volatile. Bull zone, bear zone, bull zone is always a decent setup. So, get it. No bueno. Oh hell, that one went bust. Statics are so hard to get off the ground though. All right, let's. You have a $600 loss and that's it. That was a little risky though. Okay. I got all the accounts primed for a long. Let's go. That's a problem. It's like right on the edge too. And the trade's gonna take off. That's for damn sure, but sucks. A little risky with that little volatility. It is. This is all it takes. It's literally all it takes. All right. Well, I got a bunch of lame. Okay, go. Here to here. Watch, guys. Watch. Watch it pop. Watch it pop. Signs are good. Watch it pop. Watch it go. Did I short off bull zone off a bull zone bottom? No. Never. Never will short off bull zone bottom. Never once. If DD ratio is less than half, I'll let it pull back here and then short on the downside. Man, what a lame market today. The problem is a little volatility off of this news, so drawdown's gonna be higher. Don't ever short off a bear zone top unless DD ratio is less than half. DD ratio is good. I always bet that we break. Or I always take that long basically every single time if I can get it. Watch. Just watch. I always find my fist on the table. I go every single time. I hit that trade every single time. Every single time. Every single time. Problem with static elites is such a tiny bit of drawdown. 625 is just barely like a little bit. Like here to there is enough to get you. Yeah, the first trade's got to be super confident. Now I was confident. I do got a handful on the long side as well off the screen. So let me grab one of those and put it on here. I went long in a handful of them. The one on the screen was in a bad position. I'm long in the challenge account. I'm long in all the stuff. Watch. All the way to the top. Watch this. And I close out right when you hit the bull zone. Close out of everything. Check it out, guys. Check it out. Look at this. Look. On my screen. What'd I tell you? Ready? Hold on, wait. Where are they at? You stole my blue sunglasses. Getting bright in here. For all the star power I see, it's getting a little bright in here. Let's see if we get it. Remember, lucky sunglasses. Point at the screen. Bull zone to bear zone. It's a balance trick. It's a balancing act. Markets always kiss a bull zone when DD ratio is greater than half. It wants to touch, and as soon as it touches, I'm out. That's the problem. Again, there's a lot of volatility after these Schultz numbers, so watch. I could get squeezed pretty easily, but the market hates the middle when it starts in one zone. So usually when you break in the middle, I always bet here. We talked about this setup right earlier in the day, right here. As soon as I tap that bull zone, I'm out. Go up. Go up. Go. Go. Everybody ready? Say go. Tell it to go up. Would I take that short of a hedge pressure? Oh, no, never. I don't short unless there's two places. I want everybody to tell me where I short markets and why. Only two places I short market, or three places I short markets, really. I never short hedge pressure. Never. Oh, my God. No. I'm glad you asked that. I short right there. You guys know from the colors. I short from here. Or gray. Whatever. That's it. These are the only time I short. That's it. That's it. Only times I short. So oh, you understand what they are, right? Yep. MHP always DD ratio and half top band. Bear zone top DD less than half. DD needs to be less than half for me to be shorting off of band or the bear zone and monthly hedge ratio. If it breaks bull zone, if it touches bull zone, I'm exiting. That's the thing. Scalp from here to here, I'm not longing it for the big up. Here to there, I'll exit. But when you break into the middle, we all know when you break into the middle, it hates the middle. Hates. From the bottom or from the top, hates the middle. When you open in the middle, it loves the middle. But when you break, it hates the middle. It wants to leave the middle quickly. It wants to get one side. It wants to get onto one side or the other quickly. So it's not going to like lollygag in the middle that much. But I always take the trade from here to there, again, to bet on that ratio. So a nice little bull trap. Pop it up here. I'll close my position and then let the market do whatever. Even if it crashed for the day, I'm not shorting. This ratio keeps me from shorting. The break hates middle. I'm more likely to wait for the bull zone bottom. If it goes to hedge pressure and pulls back the bull zone bottom, I'll be backing on the long every time. Again, this is being like a really shitty sort of market day. It's trying to sell. Remember that pre-earnings sort of movement is trying to sell off this market. A little bit of drawdown here. All right, sunglasses on. I'll have to pound my fist on the table here and I can say every damn time. Every single time I long right here. Every single time. Every single time. There's a 90% chance that this happens. Some of our setups are 90%. This is 90% chance. Here to here. And also 90% chance it closes back down in here. There to there happens 9 out of 10 times. This is one of my bread and butter trades. It is partially responsible for my high win rate. It's one of my favorite trades to take. Too bad it didn't work on the funded account, the first one, but these other ones it's doing pretty okay on. That was a launch one out the door, so it had some drawdown. Right, so when you launch it right out the door, it's like that first trade's super important. Because high probability setup, I take it. But every time I look for it to go to there. Not halt in the middle, but to push as one final run. That's it. There is a 30-second delay if you read the announcement. There's a 30-second delay. See from the bot? Because we have a Zoom call that's real time. You can subscribe to that. Like we delay the free stream because we have a paid service that you can get actual stream in real time. And we've got hundreds of people in that stream right now. Yep. So the bot posts that stream is delayed 30 seconds. Also, because I'm competing in a contest, it's also useful because a lot of you guys watching the stream are also in the contest, right? You'll be copying my trades. Possibly. Maybe not. Dumb market's going to be dumb. You guys want to check out the Rocket Scooter service and learn about what we do and some of the styles that we have and what we teach? We do have a program. Check out the link in that bot post. Post for you again here. Remember, you guys, we have a coupon for Elite Trader Funny. If you don't, please use our link going forward. I want all you guys to use our link. You want to watch the stream and help us out? Use our link right here. If you click that link below, you get 85% off all your evals for the next 3 days. Click that and sign up because they're literally dirt cheap. Go stock up on 20 of them. Spend a couple $100 and get as many as you can. Because when that sale goes, they're all back to full price. So use that link, stock up. They're absolutely dirt cheap right now. So for going forward, make sure you use our link every time you buy one. We love you guys. Check out ETF. They're a pretty awesome company. The challenge account's up about $2,000 again. I took the same long in the challenge account. Hold on. Come on. Bull zone, baby. Hanging in there. There's in the bull zone. This is a hedging balance. This is a whole new trick. But if you guys are new to the stream, my name is Matt. I'm a full-time day trader. I've been doing this since 2015. I'm a former chemical engineer. I used to work for Dow Chemical. I was a reaction specialist. I majored in chemical engineering with a subspecialty of reactor engineering and economics, reactor design, catalyst design. Essentially, I was a reaction engineer. It's a subspecialty. Very few of us out there in the industry. And I ran some chemical reactors in my late 20s. I used to write mathematical models. It's like a whole bunch of different things. Got interested in commodities trading back then because we used to price metals in for our catalysts, order them at advantageous times to the business, and I started studying platinum, palladium, nickel, all these metals had prices out there and markets for them. I got super fascinated with financial markets during that time, my late 20s. And then I've been trading since 2010, full-time since 2015. I've been streaming since 2016. You guys coming out here to the stream, hang out. Lifetime, get the Zoom live stream for free. It's included. Yeah, you do now. Only if you're new Lifetime on the new site. So you need to get the new Lifetime. And by the way, we have a deal on Lifetime. $1,500 off. You can buy the software outright and have it for life and get all the new tools that we make for it for free forever, which is like the most popular option here because there are thousands of Lifetime members. We have 6,000 people in our community. Over half of them are Lifetime. So we invite you all to check out our program. There's a sale. It's our Black Friday sale, but we're doing it just for this week, early. And then it's going to go away, and then we'll come back for Black Friday only for that day. So if you want to get on Lifetime and cut out the $200 a month subscription cost, you get it. So our software is Rocket Scooter Trading Platform. You get all the tools, liquidity maps, all the indicators, DD resilience, all the future stuff. Designed by futures traders, mostly to service futures traders, but also works in equities and ETFs and options as well. Matt is a freaking genius, in other words. No, I'm just a try-hard nerd. Although, while I was an undergrad, I did teach at the University of Houston. That was the only time I felt like I was privileged and smart, was being a teacher. Having other young, hopeful chemical engineering students look up to me and my teaching, which is kind of cool. I fell in love with teaching, which is why I do it here. I loved it. I had such a great time. I used to teach fluid dynamics. Which is momentum transport phenomena in fluids. And I used to teach material science engineering, was like a class in steel and ice and carbon nanotubes and cool stuff like that. Had fun. A video about engineering and being nerds. Is it YouTube appropriate? Let's play in a minute. Oh, dude. Don McMillan. He's hilarious. I love that guy. He's funny as shit. All right. Hold on. I can't see with my fucking sunglasses on. Hold on. Let's go. Let's go. Hit that bull zone. Hit that bull zone. Let's go. Hit it. I'm out. I'm out. I'm out. I'm out. Every single time. Out. There's today. There's the one that went bust. Boo. Here's 2 more evals that went bust. Boo. And then these are all funded. A couple of, and this is the challenge account. Every single time. Every single time. Every single. I feel like a crackhead really quick. Every single time. I love, dude. I'm 90%. 90%. 90%. There to there. Support here. I'll get back in on the challenge account. Like I said, I don't want to YOLO it too hard. But I need to get first place on that thing. I never chased along here unless the support's here. Remember, I don't chase that long from there to there. Every single time. This right here. That was enough. By doing the same thing. I don't chase further until it supports bull zone and get back in on the long. SPY doing the same thing. And as soon as SPY taps the top, it might be it. No shorting. No shorting. No shorting. But I'm going to let it play around here to there every single time. Guys, every single time. And like I said, we'd love for you to sub to our program. We have a trial. You can have the platform independently. Whatever you trade, we do all futures, all ETFs, all everything. Here. So I'm going to do a trade from the top of bear zone to bull zone every single time. And the joke is, whenever I was teaching these classes, I was like getting mad at all of my students because they were like, I go, yeah, I long it every single time. It's like 90%. Well, what about this? And I go, every single time I long it. Well, what happens with this? And I was like, every single time. So now when you see the meme in chat, when people go pounds fist, anytime they say pounds fist is because in the video, I was like, so we go every single time. So you'll see a bunch of memes in our chat about that, but it means that the 90 percentiles, I never fight them. Never. I hit them every time. Old lifetime does get the Zoom call. You have to transfer to new lifetime. And I'll show you how to do that. Yeah. Expected move completed. Just sit back, get out of the way. That's all I'm going to do. Just sit back, let it do its thing, get out of the way. No long, no short, no touch, no nothing. Let it do its thing. Expected. No shorting, no. So I do this trade every single... Damn it, I swallowed, I'm going to kill you. Every single time. Oh, so funny. So wait, you do this trade every single time? I'm gonna give you like the mean stare. It's such a high probability setup. It's such a high probability setup. We give you a cheat sheet that talks about it. And the new cheat sheets that we're actually making right now will have the probabilities on it. When you enter bear zone from the bottom, you take this trade every single time. When ratio is greater than half, the percent, it's in the high upper, I say 90%. It's actually closer to like 96%. It's the high 90s. And I get out of the way every single time, every single time, every single time, every single time. I'm hoping this crazy, choppy, shitty market squeezes out some of those YOLOs. That's what I'm hoping for. So maybe I can still get going on this thing. All right, Zoom. I love you guys. Head over to YouTube real quick. Let's get those numbers. Your week so many times, Scott. I know, man. It's been so crazy, right? Still 90% chance we return to bear. Well, you got to look into this right here. Look at this. Look at these. Yeah, it's about a 90% chance we close back in bear zone. That's why I'm out of the long. You see what I did? I didn't go in there and be crazy on this. I definitely need to get some heat on this account, though. I need to pop ahead of all the YOLO traders. See that? Get out every single time. Now, I think QQQ is close to upper DD band. Let's go to futures really quick. Did we get close? Oh, not even close. All right. I see you guys. All right, go. Everybody go to YouTube right now and hit that like button. Zoom, we're leaving in 10 seconds. Go, 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 go. That's it. One and done. Bread and butter. Relaxing vibes. Can't deny how well it works. It's just such a... Market maker zones are by far, like, when we tell people we have something special, it's special. These zones, this is a very complex mathematical thing I do. I mean, but this is what happens. You put a bunch of engineers on the market. You're going to let us dig out some numbers that make sense. I even tell people how it works and nobody's still figuring out how to reverse engineer what we do. I tell exactly what we do. I teach people, like, they're like, how does this even work? What do you do? And I actually teach people the method. And still nobody's created a copycat because the mathematics behind it is very complex. You just sign up for an eval account with my link. Oh, awesome. Awesome. Yeah, you guys, don't forget, get your ETF evals from us. We got a really killer discount, 85% off right now. And use that link every time because when their sale goes away, I get 50% off. So a neat thing is that if you guys trade with Elite Trader Funding, I get 50% off permanently, always. So that's kind of nice. It's 85 today. Now again, I'm sitting on the sidelines. There's no shorting from here. There's no longing from here. There's just waiting from here. I got the trade I wanted. I'm out. Now here's what I'm going to tell you what's going to happen today. You guys want to see the rest of the day? How did I do, by the way, on a scale of 1 to 10 in chat with today's setup, right? I waited, I executed, and chased the short, not chasing the long. Here's what's likely to happen today. You see this equilibrium right here? The market's likely to spend all of its time around here until the Google earnings, to which it's going to do whatever it wants to do. Who knows? If Google and AMD today, wait, AMD or AMC? I think it's AMD. Visa, AMD. Yeah, that's a big day today, right? 11 out of 10, 10 out of 10. I love you guys. Y'all are great. So when you see the market like trucking along like this and it spins one way or the other, betting on earnings, we're back to like here is this equilibrium zone. Now I don't short it, but remember, this to there is like an every single time trade. There to there, an every single time trade. Supporting bull zone is great. You have a support right there. S&P tapped it a second time. We're watching S&P futures. The bear zone topped. I went a second trade in the S&P. I know I'll be over trading if I do anything. Market looks like this. It's trekking along. So this is your new equilibrium point. As you can see, it's moving like this. So anything that straddles this line is likely going to be like a dip to trade back to here or a short to come back down to there. I've seen this kind of day a million times when the market sells, trades, and then sells again, drops and pops like this. You kind of get this move right here. And this is kind of like lower like that. This market's got an equilibrium like here. So whatever happens, pops are going to retreat, dips are going to pull, and then you look for that. So essentially, I don't short it. It's really close to where it wants to be right there. But if this market like dips really hard, I'm going to buy again right back to the top. And this will, well, in challenge count only. We invite you guys to come to our training program. It's actually pretty serious. I know I'm goofy on the stream, but the training program is 20 days total, 20 different sessions. Each session's like 30 minutes to an hour. You learn 20 different techniques. It's all risk management, position management. Let me show you my performance curve. Now, again, it doesn't imply your performance curve. Let me get this to like... some weird... I don't know what's going on with TradeMate here. This is a challenge account. The way that I maintain a 75% rate as a trader, we teach people in Rocket Scooter these high probability setups. That's all we do is we teach them to you. You can buy the tools outright. You can subscribe to the platform, get them yourself. You don't want to delay on the stream. What you guys could do, it's 3 days. Full refund. We're doing our Black Friday sale early, which is 50% off first month. And like I said, we have 6,000 people in our community for a reason. The setups are, people use them for risk management or whatever they do in their trading. We can't promise you gains. We can't promise you returns. But we do show you how to plan for yourself. How to kind of do what you want to do. Now, this is again, my stuff doesn't imply your stuff. I maintain a 70-80% win rate historically. That's my normal. I don't trade a lot. I trade only when it matters. I'm in and out. Run up to drawdown ratio is about a 4-to-1, which is what you want to have whenever you're trading trader funding programs. Performance curve. I want you to look at this and I'll explain some of what you see. Ignore this right here as strategic, as anything but strategic YOLOing to get ahead of the other people that are strategically YOLOing. Kind of sucks. My normal performance curve was up to here until I started taking very heavy, big bets in the account because I got to get ahead of the people that went from 8K to 48K in 2 days. Somebody went from dead last to dead first. It's really funny. Or to second place. So as the end of a contest, as I announced last week in chat, I mean, I play chess when it comes to contests. I anticipated somebody doing this. And there wasn't enough. I knew that the NASDAQ moves a certain amount every day. And if somebody full ported, I knew they can make 10 to 20K days. So I knew that being at 41,000, somebody at the bottom that just randomly YOLO'd at the wrong time, at the right time, passed me up. So because of that, I have to take strategic heavy trades. Yesterday, I kind of took a dip and I recovered. And then today I'm back up here. But I don't know if this is enough to get me in first place unless other people are doing bad. So that's my performance curve. Like I said, it's really solid. The mechanism of how we do that, we train you. There's some tricks to the position size that I use. There's tricks to when I get in, when I get out. And what I do is I try to maintain a really good drawdown, such that I'm never losing 50% or 75% of my account in like a couple of trades. Position management is how you get your curve to look like this. Position management is the size of your trade. It's a whole school of how we do it. And like, that's why people subscribe to our stuff, because they learn position management. If you're struggling with like trader funding programs, because you're betting too big. You know, I passed 20 evals in literally 5 days. Trading elite funded accounts right now. Week number 2 is trading one. This is Elite Trader Funding's hosting a monthly contest. And I started a week late, so I'm like behind everybody. So I gotta try a little harder to get ahead. Yeah, so that's basically it. You guys like what y'all see? Thanks for tuning in, of course. Ooh, back to bull zone. I don't want to do this. When you're back in bull zone, it's a 10% chance we break through. 10% chance we close up here. 90% chance we close down here. I don't ever short when the market's trying to be bullish. As a matter of fact, here, I'm more willing to long. Here, trade a higher. Problem is we have hedge pressure, but hedge pressure is not a resistance. In a BSU, hedge pressure is always support, and bulls on bottom is always Matt's what? Favorite trade. Right? My second favorite trade is here, which is bull zone bottom to the halfway point in a BSU, which is trade number 1 in the little cheat sheet here. These cheat sheets auto-populate on the chart, by the way. It already kind of played out. I normally exit my trade there. And again, any break from here is a continual run. But this bull zone support isn't bad for this trade. So I'm not going to bet that the market sells off by any means. Well, I do need to hit this challenge count pretty hard. So bull zone, I'm back to longing. I'm longing here. I'm adding here and trading it right back up. So now that we've switched to a bull breakout, the trade is a long from here and then a long from there back to there every single time. Long and exit every single time. So now we're trading in this new vicinity here. Would I take a short if we get out of DD to the upside? Never. Omar, I never short that. Ever. I never short on DD band breaks to the upside either. Unless the ratio is less than half, and it's not. This is roughly there. Great question, though. Yeah, I took the delay off. There should be no delay. YouTube naturally has like a 10-second or 5 to 10 second delay sometimes. That's a YouTube thing. So from here, 572 to 660 roughly, over closer to 100 points. About 2.5 on Qs. These are roughly there. I'm back in on the long in the challenge account. Put that on the screen here. It's the challenge contest account. The problem is the scalp only goes to the midpoint. So I'm like, essentially, normally I trade from here to here and it's just a scalp and that's it. Daddy got to get some gains on this. Close that out. Close that out. I trade that scalp every day. Here to there, there to there, there to there. Every tappable zone, I trade it right back to the middle. Trade number 1. In and out. So it's a really tight squeeze. I'm baby scalping from here to here, here to here, here to here. Oops, let me move this to here. So this is trade setup number 1 on this BSU. The letter code represents one of the 8 setups that I look for. The bottom of a bull zone to the halfway point between there and the blue is always a scalp. I've made the scalp 3 times now. I don't normally trade beyond this. And now I'm going to wait for any kind of support. I'm going to buy every day. So I'm fully flat and everything right now. Nothing. Baby. We have our project team meeting in 20 minutes, and then I got to go off stream so I can go chat with our project team. We're developing some really awesome new features. These probabilities that we have are going to be actually displayed on the chart in all future versions of Rocket Scooter. You must be subscribed now to get them. Because if you are not subscribed now, they will be available as an add-on to the platform and will be charged for. They'll be included right now. If you're in lifetime, grandfathered in. If you're in the monthly, the new monthly on the new site will probably give you like a really good discount, or we might even be, friendly enough to give you practically nothing on it. The probabilities on the chart will be an add-on. If you're lifetime, you get it for free. So the idea is the new add-on is going to say, essentially on here or on here, it's going to draw what are the odds that certain setups happen. 90% end of day here. Res greater than 0. So we're going to have like support. And it'll say like Y. Long. It'll have like all this stuff here. Right? 10% of days will close here. 96% of days will close below this top green line, and 4% will close above. So it's going to be like automating that part for you guys. What's up, Sam? Been a while, bud. How you been? From here, if we tap bear zone, again, I long it every single time. I'm not bearish this market. I am not shorting this. Any flush is a dip to buy now. I've taken the little L right here. This is the BSU one. You guys know this one? I've taken this scalp 3 times. One. 1 trade, 2 trades, 3 times. So taking the scalp twice. I've traded from here to here once. So 3 trades total. I gotta do something fancy. These challenge counts. I gotta outpace the winners. Look at SPY pressing through, same exact setup. Remember, here to there every single time. A nice second dip on S&P. Every single time on S&P. Should I? Should I? I do it every single time. All right, let's tap it on the S&P. All right, I'm long S&P just for here to here. That's on oil. Yeah, so I don't think oil is a growth asset much anymore. I think oil is pretty much stagnating at $70 and lower, especially adjusted for inflation. Oil is still priced slightly higher than the average. Over time, the average oil price, when you adjust it, is roughly $40. And we've been sitting at 70, 75, 100 since, COVID mechanics and other things. I really don't think that oil is going to grow to $100 again in decades. I don't think it's ever going to go there unless there's a war or something that takes it there. Natural mechanisms, oil is completely dead as far as value goes. This demand is going to go down as the supply and technology gets better to pull more oil out of the ground. People be refining dirtier, cheaper oil. It's just not a super growth asset. And the Saudis also know that. That's why they've were liquidating Aramco and then trying to get into the banking business because they realized that, oil's not the future. It's the future of materials. They still make plastics and all kind of stuff out of petrochem, but as far as like oil for fuel, like, that part of our history is our history as a species is over. The oil world is not the future. Renewables will be the future. Electricity will be the future. And a lot of that comes from nuclear sources and coal sources and things like that. So oil just doesn't have any $100, $150, $120. It's not possible anymore. That's my thoughts on oil. Pull up a chart and show you what I mean. I was an oil trader for 5 years, by the way, you guys. So this is like where I got my start. Oil's my honey. Like I said, adjusted for inflation, oil's average price is roughly $40. It rallied to 140, 150 because we had two U.S. campaigns in the Middle East. That always makes oil prices go up. We dipped, we retraced, created the shale boom. Market killed off when they flooded the market. And now COVID rallied us to this level again because people hoard commodities in times of crisis and inflation. Now the inflation's over. Oil is going to be $40 and $50 in the next 5 to 10 years and stay there for like the rest of my life. So in case you guys are wondering, oil is going to do this for the next 2 or 3 years. It's just going to decline. As the economy starts to improve and assets go up, commodities like oil are just going to kind of die as far as like rally potential. I think we're doing this. And then the next big recession, people start to hoard commodities during recessions. And I think oil's future pops will still be below $90. Copper should pop over the years. Absolutely. Copper should pop over the next couple of years. Any metals. Metals are like, the crux of civilization development. Any growth spurt that you see in a country where you're building stuff. Copper is like, you think about what copper is. Think of copper as building materials, right? When you're building stuff, things like metals and copper go up, It's like an old trick of the Romans. You're building using copper to make stuff because your civilization's expanding. The Bronze Age, all that stuff. I traded oil for 5 years. How am I still alive? Barely. That's why I moved to equities because, oh my God, please. If you guys were ever traders out there, oil trade, speculative oil trading in the futures market is the worst. It is hard as crap. It's not hard because trading is hard. Trading is hard. That's not what makes oil hard. What makes oil hard is any commodity has like single acting catalyst, and it doesn't matter what it is. With so many suppliers of oil, Russia tweets this country's fighting with this country. This country sent a drone attack to this country. This country hates this other country. These guys are embargoing. There's an embargo here. These guys are taxing here. The currency of this nation is dipping, and oil is their main source of income. There are so many global catalysts, and the problem with oil is that U.S. is a major producer. Saudi Arabia, Iraq, Iran, all these are producers in the middle, and then you got Russian producers. So oil is a 24/7 job, listening to the news and all the nonsense that you got to pay attention to. And then those OPEC reports come out 3 a.m. You got to stay up all night to get the information about supply cuts and all that. Oh. And every Wednesday there's a catalyst where you get the EIA report. Tuesday night the API reports, and oil moves up and down 50 cents because this production's down 500,000 barrels or up 1 million barrels. It's just like a total shit show. There's too many moving parts. The moving parts happen all around the globe 24/7. You don't sleep. You're listening to all kind of news. You're listening to Al Jazeera. You're listening to everything for any kind of hint. And then weird shit happens in oil. Like, I remember one day I was trading oil, and oil went up like $3 on news over the weekend that a drone hit an oil tanker. Right? Anytime you lose any oil supply, the oil market goes into a frenzy. Like, oh, there's going to start a war, and this country's going to fight that country, yada, yada. But what happened was, like, they just say a drone hits an oil tanker and the oil goes up $3. And then the next day oil collapsed because it was like, well, it wasn't a military drone. It was just like a flying surveillance drone. And it's just like, So basically, you know, somebody's like filming a wedding or something probably and flying the drone around for Instagram or whatever, and bumps into the side of the tanker, and somebody's like, "Hey, is that a drone?" And all of a sudden, oil's like. So yeah, no, it was an absolute shit show to trade oil. Yeah, I took the ES trade. So, oh, I'm sorry. Is it not on my screen? Oh man, here it is. But it was fun. It's just I liked sleeping, and I like stability, and the catalysts in the S&P are entirely predictable. There's very rarely going to be a tweet. Well, I don't know. Maybe when the next presidential election finishes, we might get a tweeting president again that moves the markets. The S&P and NASDAQ don't just randomly move that much. Not in Biden era trading. It's a really still market, and it's so much easier to trade the indices than it is commodities. It just takes like one country, like giving the other country like the stink eye, like the oil creators are like, oh, they're gonna fight. How much do you guys hate each other? Okay. On oil. Yeah, it's like that. You're listening to so much noise, and it was exhausting. Is what Sam's talking about. Super exhausting. When you met me, I didn't trade indices. Nope, I didn't. I liked oil because I had familiarity with you know, oil and gas because I was an engineer for a while. But what size accounts do I get when I get evals? It just depends. The static, I like to get the 100s. The other ones, I like the drawdowns. I like to get the bigger ones, like the 150 or the 2. There's a 150 and a 250, I believe. Is QQQ hedge pressure touch exit for the SPY trade? No, I'm not proxy trading. I'm trading SPY veritable. The every single time trade? Every single time. Every single time. Got to go in 5 minutes, you guys. Don't forget, hit the like button on the stream. Leave a comment. We're here every day. Help us grow these numbers. Y'all are our friends, our family. Our favorite traders here. Don't forget, we have a lifetime special. If you have not joined Lifetime, get in, get ahead. All the extra stuff we'll be doing. Coming out, these probabilities will be actually printed in Rocket Scooter. You can use it yourself. We have 6,000 members. We are one of the largest futures trading communities on the planet. Private community, so it's a closed chat. You're not going to be in there with a bunch of noise, a bunch of freebies. It's actually a bunch of really solid traders. We've been trading together for 8 years now and streaming. One of the OG future streamers. I've always traded a real account until trader funding programs became a thing, and since you guys like those, I'll be trading those so y'all can watch how it's done. Make sure you use our Elite Trader Funding code. Go up in chat. You can see we have 85% off of all evals. Use Rocket Scooter code or use that link. And don't forget to come to our Discord. If you guys want to try out our classes, this is by far how you're going to learn these things. You want the every single time setup. You're out there trying to learn trader funding programs, position sizing. That's what we specialize in. Come in and check us out. 3 days, you can get full refund if you don't like the courses or it just isn't something you want to do. But I promise you one thing. Take my word for it. Results may vary. Okay. These are actual reviews by actual customers that bought the actual product. So go in here and I invite you to read them. People are actually best deal on the internet, completely different. Nobody was enticed to make a good review. People are saying leave honest reviews. There's absolutely nothing like this. Learn futures. Have had a profitable week ever since. Again, they're testimonies of users. I'm not validating, verifying, or trying to use this to entice you to buy anything. The product is revolutionary. People are saying this on their own. Monthly maps is gold. Paints a clear picture of what to expect in the coming weeks. Yada, yada, yada. Thank you guys for leaving all these awesome reviews. Feel free to keep leaving reviews, team. Strongest, most reliable indicators in space, no doubt. 11 days ago. Sword, one of our newest members. Awesome. Love you guys. Okay. Thank you. really make my day. This is why we build what we built. We want to do something that really helps traders out. The probabilities work the same way on a single equity stock. Paul, they're roughly the same. We're going to create a backtesting module so that you can backtest the probabilities on each stock to find out. Now, the probabilities we present are for the indices only. It's believed that every stock will be similar, but you'd have to backtest it yourself. Now, to let you know, our probabilities are based on a 6-month backtest from now, looking back in time. The last 6 months, those are the current probabilities. These rules here, these lights, change the probabilities. When they're all green and yellow, it's a go. When some of them are red, the probabilities are less known. We call it irrational rules. So nice, clean days like this, those 90% rules are really solid, right? What the fuck is this volume? It's not a bug. Usually it's a late report, dark pool fill or something. Yeah. All right, I got to go, you guys. Love y'all. Well, we invite you to come to the courses. We'll teach you a whole lot more today. 3 p.m. Eastern, we start. We're doing the 20 days mindset course chain, like the profitability mindset. We teach you to have a profitability mindset. We teach you that all about trading is all about risk, reward, position sizing. That's it. It's not the right indicators you have. It's in a market, identifying the things that you know are high probability and taking them with the right position size. Like I said, 3 days, 100% guarantee money back if you don't like the courses. Take them, though. They were created by a team of engineers for probabilistic trading that's based only on statistics, high probability setups, and how to trade around them. Wait for what you want, like you saw me today, and then tap in those high probability setups. And I said, take them. I love the courses. I'll give you the link one more time. I got to go to team meetings. We're actually planning this thing that we're going to release with these probabilities on the charts. You guys are going to love it. That's going to come out later this year. Do this, and it gives you access to the Zoom calls as well, which are real time in the mornings. There's a delay on the YouTube stream. There's no delay on the Zoom call. I start streaming at 9 o'clock every morning, Hank. And we stream again at 3 p.m. Eastern to close out the market. And that's on Zoom only. So you guys got to click that link that I just posted and then subscribe to the Zoom call. It's like I said, come for 3 days. If you hate it, full money back. There's like zero risk to you guys, I promise. But that's why we do that. So come on over. Today, we're going to talk more about trader funding programs and how to manage your drawdown with these high probability setups. It's going to be a course you don't want to miss. See y'all later.